If you're an entrepreneur, a freelancer, or anyone who signs the front of the check instead of the back, you already know you play the financial game differently. You take risks, you build things, you create your own income. Suddenly the rules change and not in your favor. Traditional mortgages were built for 9-to-5 employees with W-2s and tidy payroll records. And if you've ever tried going through a big bank as a business owner, you know exactly what happens. They look at your tax returns, they see all those legal write-offs, and they assume you barely make anything. Meanwhile, you're thinking, if they just looked at my bank deposits, this would be a whole different story. And that's exactly why this guide, and honestly, this entire conversation exists. Because entrepreneurs deserve mortgage options that actually reflect how entrepreneurs earn money. I'm Sunny with Sacramento Condo Finance, and I've spent years helping business owners qualify for mortgages the smart way, not the traditional way. Let's break this down simply. The biggest mistake entrepreneurs make is assuming they have to fit into the traditional mortgage box. W-2s, perfect pay stubs, 2 years of identical income. That's not your life, and lenders shouldn't force you into that mold. This is where non-QM loans come in. Non-QM simply means non-qualified mortgage, and that's just a fancy way of saying you don't need tax returns to prove you make money. Instead, these loans look at your real income and assets the way entrepreneurs actually operate. You've got bank statement loans where your deposits become your qualifying income. You've got 1099 loans for independent contractors, asset depletion loans for those of you sitting on savings or investments, and DSCR loans for investors who want the property's cash flow to do the talking. These are game changers for business owners because they finally let you qualify based on how you truly make money, not how the IRS views your taxable income. Now, if you want to really improve your chances of approval, there are a few insider hacks I always share with my clients. First, keep your business and personal accounts separate. Lenders need clean deposits to analyze. The less commingling, the faster you get approved. Second, work with a broker who actually specializes in non-QM lending. Most banks don't advertise these programs, and honestly, many loan officers don't even understand them. Third, build strong reserves. When lenders see savings, investments, or even business liquidity, it lowers your risk and expands your options. Fourth, write your letters of explanation early. If you've got irregular deposits, seasonal income, or credit bumps, the easiest way to control the narrative is to explain it upfront. And finally, shop multiple lenders. Non-QM pricing varies wildly. One lender might approve you instantly while another denies you in 30 seconds. Comparison isn't optional, it's leverage. Look, the bottom line is this: entrepreneurs absolutely can qualify for a mortgage. You just need the right strategy, the right documentation, and the right lender who understands your world. If you're ready to stop fighting the system and start using tools designed for business owners, let's talk. Click below to download our full entrepreneur mortgage guide or reach out to Sacramento Condo Finance for a personalized game plan. We'll walk through your income, your goals, and your loan options, and we'll help you crush the mortgage game the same way you crush everything else in business. Your home should be as flexible and ambitious as you are. Let's make sure you get the financing to match.